This is a Brooklyn-bound 2 train. The next stop is Wall Street.
Stand clear of the closing doors, please.
Welcome back, everyone. This is Not Your Advisor with NYU Grad on Monday, June 17th. Hope everyone had a great Father's Day weekend. I spent some time barbecuing with the family, as well as some cousins at a house out in Long Island. It was really fun. I did not overeat, which was great. But today's episode, I'm going to call it Overweight AI Chips and Guacamole. So let's jump right into the session, June 17th. Looking at breadth, it was 726 new highs versus 344 new lows. 59% of stocks were advancing versus 38% declining. Let's see here. 51% of stocks were below its 50-day moving average, and 37% of stocks were below its 200-day moving average. The complexion was fairly bullish all day. I'll go through the sectors as well as the Mag 7, but the big tech and semis are leading the way. Curiously, the only Mag 7 that was red today was NVIDIA, if you can believe it. NVIDIA was down 0.66%. Kind of surprising. Microsoft was up 1.3%. Apple was up 1.9%. Google was up 0.25%. Meta was up 0.5%. Amazon was up 0.25%. So nothing spectacular other than Tesla. Tesla was up 5.3%, continues higher here. Let's see. Adobe was down 1.25%, just pulling back from the recent rally. Majority of semis were green, though. So that was kind of the complexion of the day. Taking a look at the sector analysis, tech led the way to the upside, up 1.23%. Then it was consumer cyclical, up 1.2%. Industrials, 0.98%. Consumer defensive, up 0.8%. Financials, up 0.78%. Communication services, up 0.3%. Basic materials, up 0.25%. And energy, marginally up 0.17%. Utilities was leading to the downside, down 1.07%. Then real estate down 0.47%, and healthcare down 0.38%. I'm going to go through a few things, but I wanted to make a note that I saw a news release that the ETF XLK, X-Ray Library, Kansas, they're boosting their NVIDIA weighting from 6% all the way to 20%. I'll be covering later today with the paying subscribers, Bitcoin miners, gold, silver, as well as some of the bullish setups that I covered last Friday before the weekend, and see how they're doing today. One actually was up 15% since I've covered it last Thursday, and it was up today again on 2x the average daily volume. If you want in, you can simply upgrade and get the full podcast with show notes and charts. So what kind of stuck out to me today on the strong side, and I'll go through these. These are all percents. I'll go through them as quickly as I can. The first one is IREN, up 9.4%. HUT, up 8.4%. DraftKings, 7.68%. Palantir, up 6.07%. Broadcom, up 5.5%. Tesla, up 5.5%. Dell bouncing here, up 5.42%. Carvana, 5.37%. Supermicro Computer, SMCI, up 4.9%. New York Community Bank, up 4.7%. Freshpet, up 4.1%. Beazer Homes, 3.9%. K. Hovani, up 3.9%. Synopsys, up 3.9%. Lam Research, up 3.6%. Qualcomm, up 3.3%. Riot, up 3.23%. UCO up 3.1, CarMax 2.5, Airbnb 2.5, Las Vegas Sands 2.5, Ally Financial 2.5, Marathon Digital up 2.49, ASML 2.49, Roblox up 2.3, USO up 2.27, crude oil CL up 2.25, TBT, which is the inverse of TLT, up 2.12. That tells me that interest rates and yields were higher today. PJT Partners up 2, Delta Airlines up 2, Instacart up 1.9, Red Rock Resorts up 1.9, and Hims and Hers up 1.9. So that was a long list. All right, what was weak? Nova Gold down 8%, DJT down 6.64, Sweetgreen 4.5, CPNG Coupang down 3.67, natural gas futures down 2.79, TZA down 2.24, Zillow down 2.23, SVM Silver Corp Metals down 2.16, and that's about it for free members. Continue to watch the Mag 7 yields, economic data that might be coming out this week, and true up tech layoffs, as well as true rate of unemployment, which is still fairly high, above 24%. With that, I'll see you all after the Tuesday session. Quick reminder, Wednesday we are closed. The market is closed for Juneteenth, so there will be no podcast covering the Wednesday session. I'll see you all after the Tuesday session. Paying subscribers, please stay on. I have about 30 plus charts to walk through with you today. That's my train.
Stand clear of the closing doors, please.